If you're looking for professional day trading education, high level trade analysis, and dissection, you have come to the right place. My name is Pat Mitchell. I've been a professional day trader for the past 11 years, and I'm here to give you exactly that professional day trading educational here for free on YouTube and on X. And tonight we're going to go over and we're going to talk about a real tight opening right on top of like a previous close or a really valid level. We're also going to talk, actually, there's two examples that I'm going to give you here this evening. So this is going to be a really good episode where you will learn a lot. So stay tuned. So let's get right into it, guys. One sec. I am going to fire up my charts. Let's do this. Okay. So really well managed trades. Today, working with my live trading members, that's where I run both screen shares, main screen share, and then my live trading. And some people ask, well, why is that so different? Well, in the live trading group, I'm working with a very small focus group where we go over very specific trades, right? And it's different. It's not just like regular trading. I'm looking for certain lessons and teachable trades that they can get involved with to help them overcome hurdles and obstacles in their trading. It's a little different. It's not your regular cut of the mill cookie cutter type of live trading. It's different. It's very focused. So today, trading Tuesdays, I trade with smaller size, very small size. And then Fridays, because we run it twice a week, I will trade with proper larger size, not crazy size, but still size that, and then that way they get the best of both worlds, essentially. So give me one quick sec. I've got to whip over here. There we go. Okay. So let's go over, what should we go? Let's go over cues first. Okay. One sec. So these, where we opened up on both SPY and cues, we were opening up on a ever so slight gap up. Okay. So I'm going to pull back this chart just so then you can see this level here, right? This 602.20 level right there where we opened up. I got to turn off that magnet, turn on my pen. So this level here, that's the previous close. So what we were originally looking for is a short. I don't want to go long up here. There's way too high of chance of it failing, even though it's a gap up. Okay. A lot of people just immediately go long into gap ups. It's a bad idea when we're on extension on the daily chart. You can see on this left-hand lower blue chart, we are extended. It's been a while since we have pulled back. Okay. So what you don't want to do if you open up very close into those previous close levels is to go long. What you would rather opt in for, let's say it opens and it does bounce off that level and you miss the long. Well, you're protected in this trade and you have all-time highs, right? So then you would just simply wait 10 minutes for the proper short. And then it's a far superior trade. It's lower risk. It's proper lining up with the daily chart as well. So what we wanted in this was at the open for us to pop. Okay. Now it dipped at the open and then it kind of recovered. Okay. Now it did pop and there was a opportunity to go short right there. I was in on SPY at that time. So what you can wait for instead, if it doesn't give you a proper pop into resistance, is allow it to fail. And you want a proper failure of that level. You want extension on the way down. I've talked about this setup a million times. This setup, which I use in combination with my strategy, it's a moneymaker. It literally prints money just like an ATM because you have such high odds of it working. So then once it slices through support, it completely disrespects it. It will. It has to come up and retest. It needs to now prove that weakness. So when it's going to come up and prove that weakness, there you go. On that retracement back into that previous support, now proving resistance, technical analysis 101 here, you execute that trade short, which is exactly what I did. Waited for the perfect entry with this blue triangle. That is my entry. And then my exits are on the way down. I'm going to pay myself into where it bottomed out. That's first support. And then I'm just going to take advantage of these big pushes down. So locking in $294 on that. Now that may sound very small, but it was a very small position. But all I care about in these positions, I don't give a shit about the P&L. What I do care about is how well it was managed. And trading directly into a target area and smoking that entry, that's what I like. It's a really well managed trade. So very happy with that. So that's one way to manage a trade that is opening up right on top or below. It's right at that major level. Okay. You give it time, you let it set up properly. Okay. So that's cues. Now let's go over to SPY. Now on SPY, you can see by my entry chart here, there was a few trades. I actually took 3 separate trades, you could say, on this. The first 2 are valid trades. That last trade is a trade that, although it's valid, it is a teachable moment with my live trading members. It's not a trade I would normally take, because normally I would have locked in already thousands of dollars on the morning, right? With the first trade feeling it out, which I'll explain here, and then the secondary trade, and then that profit taking. I would just lock in the day. Plus, I executed cues. I don't need to be taking another trade. And sometimes we have traders that don't want to listen and they continuously get in on these trades. Now, it worked, but what people need to realize in these trades where I'm taking that last trade, we have a lot of time left. And I don't care whether it works or it doesn't. And I'll explain why. So let's say it works, right? Okay, so if the trade works, I can then show how to add an average in and then proper profit taking method, right? And then if it doesn't work, then I can work on with the members what happens when a trade goes against you. How do you taper out of your trade, what to look for confirmation, and when to finally stop out. So it's a win-win. It doesn't matter. That's why I execute trades like that, where some people get it twisted and they don't want to listen, and they just continue to trade. Oh, if he's getting in on that trade, he'll be green. Yeah, but I will be green because I have management tactics and 11 years experience. And then what people end up doing is they freak out because it comes up higher than what they wanted it to, right? It's kind of one of those things where it's like, it's really difficult to explain to new traders. Like, this isn't about making money. It is about trading properly. And sometimes we need to express patience and discipline. Those are the biggest lessons that you can learn as a trader. But like, trying to tell that to people is like, I found over the 8 years of running Tricktrades now, running a service, like, people don't want to fucking listen. It's so hard on the head. And I wish more would, because you'll get more out of watching and learning than you will when you're in a trade. But I know I digress there and I'm going off on a tangent, but it is what it is. So let's go over these trades. So my trade plan here, I want to point out this level right here. So that level there is yesterday's highs. This level here was the previous close. And we were opening up below the previous close and that level. That's only about 50, 60 cents away, which is real minor. And I've talked about this lots on this channel. You are protected. You're highly protected in that trade. So when you open close enough into that level, my trade plan on this was on any green candle, I will start in on this trade. Now, let me explain why I do that. It's not just for the protection that is in that trade, okay? If I know I have a daily chart and an intraday chart that's setting up for me just absolutely beautifully, right? The protection aspect of it. I need something to, when I get in on these trades, it's not necessarily just to execute, to be in the trade. There's a secondary reason. It's to focus my attention on that chart, because I don't want to miss this trade, right? And if my eyes start focusing on cues and it does this, excuse me, that's a great trade, right? But I know my bigger opportunity is here. Just because of the daily chart and this extension, I know at a minimum I'll be able to get it somewhere in this neighborhood on this chart, which is about a 50% retracement. Okay. Now I ended up running out of time on this, so didn't. But regardless, on this trade, that's where my focus needs to be. So a lot of times I will get in on first green candle just to execute. And then I can focus on other things. Now I can watch the other charts. I'm in it and still obviously manage that position on SPY. So that's the first trade. So now I want to zoom in a little bit for you guys. So remember, up top here is that previous all-time highs, yesterday's highs, right? So we opened right here. First candle up, I'm going to execute. Okay, that's my execution. So it comes up and it snaps down. It's a very quick entry and then pay myself on that. I'm getting a feeling for the chart. Okay. So then the next trade is when it comes up, it's coming into this level that is pre-market highs. And then just above that, just barely by a few pennies higher, that's the next level up, which it tested on the next time it came up. Okay. So as it comes into that pre-market high level, there's another opportunity to get in. That's where I want to work that trade. And that's exactly what I did. So as it comes into that level, I execute again. It pulls back. I pay myself. And now I'm not looking for ads. Okay. Now I want follow through on this trade. You don't want to keep adding into a position that can and is already proven that it is holding that support. Remember, that's still a previous close. That's an important, valid long level, but I'm working the short. I don't want to keep adding and adding and adding into this position. You don't want to start doing that. It's going to get you into trouble. So on that, with my remaining position, I just wait. And then I pay myself as it comes down once you get that follow through. Okay. Now let's talk about that last trade. So on that last trade, let me clean this up. That last trade, what happened here is we start setting a trend. So I know now, thinking in the future, where my main target will be. My main target is going to be into that trend. So I'm already thinking about 10, 15 minutes ahead. So when it comes up, even if it wants to go higher, it is going to have to test this trend. It has to. Okay. That's the law of this. Why? Because we have a low, a double bottom, and then right here, it has created a lower low. These lower lows need to prove, okay? If it comes up, it has to pull back to at least test this. It needs to pull and test it. And it should actually follow that trend if it's trading naturally. Now, there's a whole reason. I could spend an hour, but that's the gist of it as to why it needs to do that. One of the hardest things to get through to new and struggling traders that are new to this game is to understand why these stocks move the way that they do. There's nothing random here. They have to do these things. It's almost like a checklist. It's almost like it's programmed to do that. Okay. It's not programmed to do that, but we are programmed to buy and sell, right, at certain places, period. Okay. So naturally, the charts are a representation of us. And I don't want to get into this because it can get really confusing to get into the weeds about it. But basically, these stocks have to do what I'm showing you here. Have to. Now, there's always outliers. I'm never saying that it will 100% do this. 100% doesn't exist. But I'm saying it has to do that. Okay, there's a difference. I know it sounds like it's the exact same thing I'm saying, and I'm talking in circles. I'm not. It's different. So, like I said, with this here, because it started creating this trend, I'm thinking 10, 15 minutes into the future. So I know when it comes up here, I am going to execute into that previous close because it can fail and then test out that trend there, and then my trade's done. Now, I'm risking highs on this trade, okay? As it pushes through, you can see I'm adding. That's my add, right? When it pushes up higher, I just about got my next ad. I'm very intentional. And I'm intentional with my ads at exact price points because I am teaching traders how to trade. If it was just me by myself, I wouldn't have to be that intentional. Why? Because I would just use simply, if I were to add in with, let's say 50 contract ad right here, right? Here, I wanted to add here, and I wanted to add in 50 contracts. Well, because I'm slightly lower and I'm not quite at that price point, I would go 40 to 45. You just limit that risk a little bit. You take into account that little bit further that you wanted it to go, but didn't quite get there. Okay. So that's a little sizing lesson for you guys as well. So on that, I didn't get that my next ad. So now I'm just patient with it. That's all. And then as it starts coming in, I am paying myself. And guess where it went? Just where I said it would go. And all of this is said prior to it happening. There's no hindsight here. I know for those of you that might just be watching this for the first time, you're like, oh, yeah, it's all hindsight. It isn't. All of this is said prior to it happening, and it's said out loud. So that's my target right there for the trade. And top tick that exit. I remained with a few. I actually kind of forgot about it, to be honest. And then as it started coming down, I just paid myself out my remaining contracts, and that was it. So all of that work, I locked in $492 on that trade. Again, trading small size. This would normally, all three of these trades, I would definitely add a 0 onto the day on that on SPY. That would be roughly what the P&L would equate to. Overall, very, very, I really like the way that it was managed today. There's a few things that I probably could have done a little bit different, but more importantly, the members always post their the traders that I work with. They always post their entries and exits and everything. And man, oh man, oh man. And I know I've been going on about this lately, and I swear it's not it's not for marketing. It's not for any of that. It's because it is highly impressive. So many of the traders that are with me they're fucking crushing it, man. Their entries, their exits, the intentional entries and exits, it's fucking fantastic. So congrats, guys. You guys are doing amazing. And that's it. So if you want to learn how to do this, where I actually have more time to explain and everything's laid out like a literal physical blueprint, come to tricktrades.com. If not, continue on and enjoy the free stuff. That's why it's there. That's why there's literally 1,000 free videos for you on my YouTube channel. But it's going to fucking take you forever to put these puzzle pieces together. But that's on you. So I hope you all have a wonderful evening, and we'll see you tomorrow. Adios.